Hello again, welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Today is Wednesday, November 10th, 2021, and this is episode number 35. Thank you so much for tuning in. Before we get into it, nothing in this video is meant to be investing advice. I am not your financial advisor. And this is not financial advice. Please always do your own due diligence when it comes to investing and take responsibility for your own choices. Another exciting day in the world of uranium. A lot of red out there today. I'm going to talk all about it. I will say right at the top of the show that if you are waiting for me to come on here today and talk you off of the ledge, you are probably not invested in the right sector and your positions are probably too large. With that said, the volatility is the name of the game, and by no means do these charts look like they're breaking down. This is a healthy correction. There's a few reasons for it. I'm going to discuss that shortly. Before I do, let's jump into the daily scoreboard here. I'll talk about the price of uranium and spot flows and ETF flows. Price of uranium up $1 from yesterday, 45.25 per pound mid-market. Another big move after Sprott purchased 1.2 million pounds yesterday, and they're likely in the market again today, not only raising cash, but probably purchasing more uranium. They ended the day at a 3.34% premium to their net asset value. Again, I don't mention this every episode, but it's important to understand the Sprott Physical Uranium Trust and their mechanism. They have an ATM, which is an at-the-market financing vehicle, which allows them to issue shares into the open market at will, as long as they do not go above a certain percentage. They state 50 to 60% of the daily trading volume, and that the trust is trading at a greater than 1% premium to their net asset value. So if you take all of their assets, the uranium that they hold, multiplied by the price of uranium currently in the spot price relative to their share price, that's how you, or the unit price actually, since it's a trust, and that's how you gauge their premium or discount to their net asset value. And they charge a 1% fee when they purchase uranium. So whenever they're greater than 1% premium to NAV, they can issue shares into the open market at that up to 50, 60% of the daily trading volume. So that's why it's important to understand when they're at a premium to NAV, they're likely raising cash. When they raise cash, that cash goes towards uranium purchases. They purchased, they took in 16.7 million in new capital yesterday. And like I mentioned, purchased 1.2 million pounds. A huge day in terms of uranium purchased and taken out of the market. Sprott Physical Uranium Trust can essentially be considered an end user. They're not going to be selling this uranium back into the market. So that uranium that they purchased yesterday, 1.2 million, that's not coming back into the market. And that's very important to understand. They ended the day with 54.4 million in cash in the treasury, still enough to buy another 1 million pounds of uranium. Since the 17th of August, which is when their ATM went live, they've raised 893.8 million in new capital. They've acquired 19.3 million pounds of U3O8. They're just an absolute powerhouse in the space. And they, if you annualize this, we're now at almost 3 months, right? Just about 12 weeks since the ATM went live, and that's 20 million pounds, almost 20 million pounds of uranium. So, annualized, that's close to 80 million pounds of uranium purchased. I don't believe that they will purchase 80 million pounds of uranium over a 12-month period, because I believe that excess above ground inventory is thinning out and will thin out over that time period. And not only will the price of uranium be moving up, limiting the amount of pounds they can purchase with the same amount of capital, if that makes sense. Turning to the sector equity ETFs, URA reflected no change in outstanding shares, but URNM had an increase in outstanding shares of 400,000 shares yesterday. Assets under management of the two trusts increased by another 68 million yesterday alone. The two leading ETFs now have a combined assets under management, AUM, of over 2.5 billion. In the first 7 trading days of this month, the AUM of the combined ETFs have increased by $375 million. I'm going to share my screen, a couple of charts here to kind of highlight what we've seen in the ETFs. This chart here is showing URA and their total assets under management highlighted on top of their share price. So you can see month over month the AUM in the colored bars going from beginning of August just over 500 million to now 1.5 billion. So URA has added over $1 billion in their assets under management in 3.5 months. Just unbelievable amounts of capital coming into this space. And of course, you can see the reflection of the share price roughly follows that. The AUM, of course, not only reflecting the cash, the outstanding shares, but also the share price. So the amount of capital that they've brought in combined with the appreciation in the share price is really what reflects that assets under management. URNM, very similar here. They've gone from 250 million AUM to almost $1 billion AUM. And of course, URNM is 100% allocated to uranium. Excuse me. Just huge moves in both of these ETFs. This is an interesting chart showing the inflows and the redemptions. So as we highlight in each episode of the Uranium Market Minute, the reporting of the inflows or redemptions and outstanding shares for the two ETFs has a lot to do with what we see in the markets. And so you can see over this 3.5-month period here, we've seen there's only a handful of days, maybe about a dozen days where there've been redemptions, and the inflows have really been the story here. And as you can also see, the number of shares redeemed versus added is vastly outweighed by the shares added. And so this is really why we've seen such a lift in the sector during August. And if we were able to trace this chart back, we would have seen the same thing December, January, February of last year. Again, we saw April, May, June. So we were seeing these 2 to 3 month cycles followed by 1 or 2 month pullbacks, and that's repeated for the last 12 months. And so this is probably going to be the way forward, folks. And as you can see, these ETF flows are just huge. URNM, same kind of thing. What is that? Maybe 10 days of redemptions. The rest have been inflows over the last 3.5 months. And also the days where they're issuing new shares into the market, they're issuing far more shares than the redemptions. So I just wanted to show some visuals there, what we're seeing in the market in terms of the ETFs. And before we jump into the mailbag question, which is actually related to the ETF flows, let's take a look at the charts today, if you are so brave. Starting off, as we always do, URA taking a pretty big hit today on respectable volume. We had a little bit of FUD come into the market. That's fear, uncertainty, and doubt. This is typically what will happen is in sectors that are hot, that are maybe a little bit on the overbought side of things, you can have a single piece of news come in that will shake up the market a little bit. And if anything, just kind of give traders an excuse to sell. And this is basically what we're seeing today. There was a story about the Clearwater Dene Nation out of northern Saskatchewan that put out a press release. They were putting the uranium industry, quote unquote, on notice. And I'll talk about that more in just a second, but the overall markets were down. A number of energy plays were down. Oil and gas were down. The broad markets were down. Plus we had that FUD news come in. So just an excuse for some profits to be taken. And we did see a little bit of dip buying throughout the day, but pretty much closed close to its intraday low, just going back near that 20-day moving average. These kind of corrections, folks, are just absolutely fine and healthy. And like I said, if these kind of days are really freaking you out, either you're not in the right sector here or you just are positioned way too large. You have to be able to stomach volatility. We are going to see corrections like we saw back in July and August, back down to the 200-day. We're going to see those. We're probably going to see one of those a year in this bull market. We're going to see multiple corrections down to the 50-day per year. This is just going to happen. And you have to understand that these sort of shakeouts are really, really healthy. Charts do not go up in a straight line. And when they do, it's really extremely unhealthy for speculators because you don't know what is causing it and why and if you should get out or not. Whereas in this case, we have a massive stack of positive fundamentals that are growing on a daily, if not weekly basis. And once in a while, we'll see corrections and some profit taking. So absolutely nothing to see here, in my opinion. The Sprott Physical Uranium Trust today. Oh, wrong chart. Another kind of dip buying day. And with the spot price moving up again today, I believe that premium to NAV probably shrunk a bit, although I do believe it's still there. This, in my opinion, is a very low risk, high reward play here relative to much of the sector, which is why I think this chart is holding up incredibly well and why it saw less selling today. It's still reasonable volume coming into this. Cameco, very similar to the URA chart, getting smacked down to that 20-day, decent volume, not scary volume. nothing really alarming here across the sector, in my opinion. I do believe that we could see a little bit more weakness. I would like to see the sector chop sideways here, in my opinion. I would love to see it chop sideways, sort of at or near these previous highs from September and October. That would be very, very healthy to see a bit more consolidation prior to what I believe will be the next leg up. And I think that we're seeing the firming up of the spot market currently, and the next leg up is going to be coming pretty soon here. So just to expand a little bit on the Dene Nation news release, it's really interesting because well, uranium has been mined in the Athabasca Basin, Saskatchewan, since the 60s. There's a current operating mine up there, Cigar Lake, Cameco's Cigar Lake is currently operating. McArthur River is on care and maintenance. There's a number of established exploration and development companies, NextGen, Denison. There's a dozen other companies up there. And interestingly enough, this press release named a number of uranium companies, and it actually named some of the companies that this Indigenous Peoples Nation has agreements with these companies already. So I believe that what they're doing is they're recognizing a couple of things. One, I believe that there's a lot of new exploration permits being granted in the Athabasca Basin in that area, and they probably want to be consulted on these matters when new permits are granted for various different new areas. And they probably are recognizing that there's kind of a uranium rush, like a gold rush, but uranium happening currently, not only in the basin, but in other areas. And they probably want a piece of the pie. So it's important, obviously, for the companies and for the government of Saskatchewan and of Canada to recognize the established Indigenous peoples of the area and make sure that their rights are being recognized and their lands are being respected, while at the same time to recognize that the same Indigenous group already has deals. They already have agreements with NextGen, with Denison, with Fission, with Cameco. Of course, Cameco employs a lot of local Indigenous people in their mines. So for them to come out and name these same companies they have agreements with in the statement, in my opinion, was a little bit of bad faith. And this is not going to derail anything that's happening up there. Maybe exploration companies, some small exploration companies that are trying to stake new ground and drill new holes in new areas of the basin, they might run up against some problems. But the established companies, especially those that have agreements, there's not going to be any problems, and there's not going to be, in my opinion, any interruptions to development activity or production, especially from Cameco's Cigar Lake. So with that said, I want to touch on one more thing before I get to the mailbag question, and that is that yesterday, France's president, Emmanuel Macron, announced that France will be building potentially up to 6 new pressurized water reactors. France currently is roughly 70% nuclear power. 70% of their grid comes from nuclear, and they have some of the cleanest air in Europe, lower energy prices than neighboring countries. And Macron came out announcing that they're going to keep going with it and building 6, potentially up to 6 new large pressurized water reactors. These are kind of traditional nuclear reactors. I know that there's been a lot of excitement about the growing potential for small modular reactors, but we're still seeing China and France and a number of other countries proceed with building these larger reactors. And so that was really, really big news to see the largest nuclear producing country in Europe to double down and say, yeah, we're going to be doing more of this. And it's clearly obvious that that's an intelligent move. And it's big news for the sector too, because leading up to earlier this year, we didn't actually know if a number of these reactors in France were going to face retirement this decade. And EDF, they operate a number of these reactors, and they review them every 10 years, and they reviewed them and said, yeah, they're going to be operating out to at least 2030. So not only do they life extend their existing plants, but now France is talking about building new ones. So that's really big news, and just more positive fundamentals stacking up for uranium. The mailbag question today, let's see, had to do with ETFs. Justin, you keep mentioning the term mandated buying when discussing the ETFs. Can you explain that? Sure. Okay, so if we take yesterday as an example, the outstanding shares of URNM increased 400,000 new shares, right? And just a reminder, URNM is the 100% pure play ETF that's going to be taken over by the Sprott, and will become the Sprott Uranium Miners ETF. That will likely happen sometime in 2022. So URNM issued 400,000 new shares yesterday. Okay. That increased their outstanding shares by that number, therefore taking in that number of shares multiplied with their share price, approximately $40 million in that share issuance yesterday. That new capital taken in must be invested into their underlying holdings in the ETF. So if we take a look at the top 5 positions of URNM, Kazatomprom 16.58%, Cameco 16%, SPUT 7.03%, Energy Fuels 5.84%, Denison Mines 5.42%. These are the top 5 holdings of URNM. What that means is that 16% of that fresh 40 million that came in through that share issuance was invested not only in Kazatomprom, but also Cameco, both with 16+% holdings. 7% into SPUT, 5.8% of that 40 million went into Energy Fuels, 5.42% went into Denison of that 40 million, and on down the line. And that happens whenever they're issuing shares and raising capital. This happens not necessarily every day, but as you saw in the charts I shared a few minutes ago, that this happens frequently. This is the flywheel effect. This is the thing that we discuss every single month in our newsletter at depth. And this is the story for uranium currently. It's not a valuation play. It's no longer a contrarian play. It's a flow of funds play. And when the funds flow into the ETFs, which they will because of the liquidity, institutional investments require liquidity. And that's why the ETFs get this massive flow of funds. ETFs buy the underlying holdings. That's the flywheel. It carries momentum. So I have one more chart to show you here having to do with the mandated buying. I'm going to share my screen again. So here's the mandated buying and selling of URA and URNM combined. This is since the beginning of August. And as you saw in the charts where I showed, we saw that dip in URA down to the 200-day. That's this. We saw funds flowing out of URA. Now you can see that the redemptions here and the mandated selling between URA and URNM compared to the mandated buying on the upswings, substantially less. But here's the dollar amounts of these individual days, right? We had mandated buying of $50 million in another big days in September and October. And so you can see just this is a big cycle. We have this cycle that's happening just about once a month. We're seeing a dip. And then if we were to zoom out in a similar chart, we would see that we'd have this same type of cycle on a longer time scale happening a few times a year. So as these flow, and you can see the overall trend here is that the funds are flowing into URA and URNM and therefore into the sector. And this continues and is continuing currently. This is the story. It's all a flow of funds story. And this is something we've been discussing ad nauseum for almost 2 years. The flywheel effect. It's the money coming into the sector will come into the highly liquid vehicles. That's the Sprott Physical Uranium Trust. That's the ETFs. And of course, by holding positions in their underlying holdings or taking options trades in the overall sector, which we have done both of, you see a lot more leverage than just owning the ETF. So we have outperformed the ETF we've outperformed URNM by almost 50% this year. If you'd like to see our overall focused list performance to date, you can go ahead and click the link in the description below. You'll receive one of our latest newsletters for free. You can get a sample, get an idea of the content we put out. Like I mentioned, we've been doing this newsletter since August of 2019, just over 2 years. And so far, portfolio wide, we have a 529% return in that 2-year period. If you'd like to see more detail on that, go ahead and click the link in the description below. You'll receive that sample newsletter. Send us an email if you'd like. If you have any questions about our service, support@uraniuminsider.com. And again, folks, take the volatility in stride. Take a deep breath. If you know that the underlying thesis is solid, days like these are buying opportunities. This is something that I highlighted in the weekly watch list last Sunday, which I do every single weekend, which in my opinion, even though the flow of funds was strong and the sector was strong, we had really big up days, confirmation of the next leg. The previous week, I did think that we would see a little bit of a dip this coming week, and I highlighted that in the watch list, and a lot of those dips that I was looking for were hit today. So hopefully, if you are a Uranium Insider Pro member, you saw that watch list and you took that recommendation, and you are entering into your positions in tranches that we always recommend. And these types of opportunities don't always, don't come along every day, or even every week. And when they do, I think that it's important to take advantage of them, especially when we have such a strong underlying thesis here with all of these fundamentals. There's more that I'm going to speak on related to these fundamentals in further episodes. I will not be here tomorrow, so I will see you guys on Friday. Really appreciate all the support. Thank you for all the questions in the YouTube comments. I read all of them, and I appreciate the lighthearted humor, saying that I am your financial advisor, even though I am not. I am clearly not. But thank you for the support, and really appreciate it, everybody, and hope everybody's doing well. All right, we'll see you on Friday. Cheers.